I kind of learnt about market structure, and what fascinated me was that it's basically psychology.
Hey everyone, welcome to another episode of Collective Shift. Today I've got a really special guest on the channel. We've got Checkmate, the head on-chain analyst at Glassnode. How are you, mate?
Good, mate.
Thanks for jumping on.
Thanks for setting this up. It's gonna be good to explore some ideas.
No, really excited. Mate, would you, just to begin with, for those that don't know of you and your background and what you're currently up to, I know you're one of the busiest guys on earth. Could you maybe give us a 30-second rundown of what you're up to in your background in crypto?
Yeah, for sure. So my entry into the crypto space, and it's one of my favorite little facts. I bought the exact top. So I was there in 2018. I think the first thing I bought was $1,400 Ethereum, and I rode that down with every shitcoin under the sun. So I kind of learnt trial by fire, and in the early phase. Through 2018, you're kind of chasing the pumps and you're watching the YouTube videos and all that kind of thing. And, I was just trying to work out exactly why I was losing money hand over fist. And it wasn't actually until the final capitulation event in November, December, where I finally thought, right, so I've invested, however many tens of thousands of dollars, I've got nothing left. Why? And that was when I actually, for the first time, went down the Bitcoin rabbit hole. And I started thinking about the economic side. Through 2018, what fascinated me was the market structure. I just enjoyed seeing things trade and how markets moved around, and started working with Ready Set Crypto, and one half of their business is the technical analysis side. So Doc, his skill set is 30 odd years in trading options and futures and things, and I kind of learnt about market structure. And what fascinated me was that it's basically psychology. It's human pain, whether fear, greed, or everything else, plotted against time. So it's people rushing in at the exact wrong time and rushing out at the exact wrong time. Now, on top of all of this, my background is in civil engineering. So I used to design basically large holes in the ground, essentially. So I worked with, it's called geotechnical, basically designing tunnels, basements, things like that. And one of the main skill sets I took away from that was taking very complex data sets, very big engineering models, and explaining them to people who have absolutely no understanding of engineering concepts whatsoever. And, to get the stakeholders on board, you need to tell them a story, and it became about the narrative. So when you kind of stitch all these things together, coming into 2019, which is really what I would call my Bitcoin formative years, that was essentially where I discovered an interest in markets and market structure. Increasingly started getting interested in the macro side, just how the whole world ticks together, because I found that the more I understood the macro, the more everything else that happens around you starts to make sense. You think, oh, okay, right, so that narrative doesn't make sense, but that one does. And you can start seeing reality from the noise. Bitcoin started to make a whole lot of sense to me. Once proof of work kind of clicks and you go, oh, I understand why you need proof of work. I understand why they made the decisions they did during the scaling wars. And understand why we don't have complexity at the base layer. All of these things started to actually make sense. And then on-chain analysis started to kind of creep in. So we had the realized cap was the first thing that Coin Metrics came out. I think that would have been sometime in 2018, maybe November or September or something like that. And then there was kind of a burst of NVT ratios, and there was a whole bunch of people coming up with these new metrics. And combining that interest in market structure, how it's psychologically, right? You're seeing human beings behaving in the exact wrong way. And the way to win in markets is basically to bet against the herd. So you're seeing their actual behavior in on-chain analytics. We're seeing data sets that you can essentially crunch big numbers on and come up with interesting models. You can see all of that in the storyline. And then also, just my skills in kind of data visualization. I just started playing around with models, right, and plugging things together and seeing how it worked. And that was kind of the genesis of it. And I thought, this is kind of interesting stuff. I was working more with Ready Set Crypto at the time, building out content. And, I thought, why don't I explore on-chain a little bit more detail? And my friends thought I was crazy because I had this big manual. Basically, I printed out bits of paper of all the original Dave Pules and the Murad Mammadovs and all these guys on-chain papers. And I'm sitting there reading them on the planes like, what the hell is this guy doing? But essentially, that was my brain just getting pulled out of engineering and into Bitcoin and into on-chain analytics. And the more that I studied it, the more I understood about markets, the more I understood about human behavior, the more I understood about Bitcoin. And what, if I'm to summarize what Bitcoin is, it's the perfect textbook that we've ever had on human being psychology. We can see how people react to fear and greed in transaction counts, in volumes. You can see a bear market, you can see a bull market. They stand out clear as day once you know what you're looking at. So then you start saying, well, there's probably some edge in this, and a lot of this is pretty niche stuff. So started to teach and just make random webinars where the audio quality was absolutely horrible. But that's been a whole process of learning how to explain these concepts to other people and kind of using that skill and passion, which is taking complex ideas and making it digestible by people who have never seen it before. So that's kind of how we got to where we are today. One of my members in RSC basically pointed out that there was a job opening for a data scientist at Glassnode. In fact, it's coming up to 12 months ago. So I just put in my hat in the ring and said, well, I kind of want to get out of engineering because I'd lost interest. It wasn't anywhere near as interesting enough to kind of keep my brain active. And, they didn't bring me on as a data scientist because I know how to use Python, but I'm not exactly a data scientist. But they said, you know what, maybe we could use your skills in actually trying to convey the message and trying to explain these metrics. And ultimately, that's how we got to where we are today. So, now it's a crazy business, but it's, they're a fantastic team. They're building out a fantastic product. There's a reason why Glassnode is on everybody's charts. Essentially, they have the smarts and all the actual data scientists. They're doing all the magic in the back end, and then I help explain all that complexity and just make it digestible for the average folk.
That's awesome, mate. And for those of you that like me that cannot understand one data or two, read the narrative, having someone like Checkmate, he's also working for Collective Shift members as well. So we're very lucky to have his analysis come across for members, and I think that's why today we wanted to dig into a few of the charts that you're seeing, mate, on the short-term and long-term side. So a few of the guys in our channel are after just sort of your perspective on, there's a lot going on in the macro space right now, and I guess, the on-chain can give us a really good insight as to what's happening. So I'd love to hear from you from a short-term and long-term perspective, what you're seeing in the markets.
For sure. So I've pulled up some of these charts here, but I might just touch on the macro side. So, again, I'm not a macroeconomist, but I'm just an enthusiast, right? I spend time trying to understand it. And the reality is that Bitcoin, and maybe actually this is the right time to pull up a metric. The reality is that Bitcoin is a macro asset. And if there's one, let me just find it. Here we are, exchange balance. If there's one metric that really demonstrates how Bitcoin is a macro asset, it is this one. This is the exchange balance, right? The number of coins on exchanges as a percentage of supply, but they all look the same. Bitcoin's entire life has seen this kind of growing up of all these exchanges. People are trading, speculating. You can see all the coins running in during the ICO phase. These are people trading and using. No, we don't have derivatives back now. This is kind of where we enter this next phase of what I would call the first kind of awakening. So Bitcoin's gone through multiple phases. I would say up until 2016, it was very, very niche, right? You kind of had to be in the right place at the right time. The exchange infrastructure wasn't there. You had to go on Mt. Gox. You had to go on some shady exchange, wire money around the world. Not an easy process. You had to mine on GPUs, all that kind of stuff. So before 2016, it very much was a hard asset to get access to, right? People who were lucky enough to get back here, there's just not many of them. Now, 2016 and 17 was obviously the first time that mainstream media, it was the first time that everybody saw what was going on. And you can see this in the exchange balances, right? You can see this rising up of coins. These are people buying, sending them to the exchange, selling it for altcoins, moving all their coins around. Now you can see that gradient changes as we move into 2018 and 19. And the primary reason for this, in my view, is that during this process, for anyone who was there through 2019, altcoins really had a very, very hard time through this entire process. 2018 through to 20, basically, if you were holding cash, you would have won. And if you weren't holding cash and holding Bitcoin, then you would have won more. If you hold anything else, you just got absolutely slaughtered through this process. So we see kind of the general inflows slowing. And simultaneously through this process, we also saw people withdrawing more. I know that, I was talking about my kind of wake-up call. Let me just zoom into this guy here. My wake-up call was essentially this capitulation event, and this is where I started buying. Right, I started accumulating, and I saw this rally. This was the first thing that kind of stuck with me. And why I've actually been using this 2019 rally as my benchmark for what's happening at the moment. The primary reason is that I remember having a spreadsheet down here, and I was like, all right, we're going to have a 1 year long bear market like we had back in 2015. Look at how much Bitcoin I'm going to buy if I'm going to, if I keep stacking sats at this rate. April Fool's Day, surprise. And this happened because I was actually on a job site, so I didn't even have access to my wallet at that point in time. So I couldn't even take advantage of it. I had all this cash on the sidelines, and I couldn't do a damn thing about it. And I remember this rally as it just ran, and it was the first time that I realized, wow, I don't have enough Bitcoin. And the market worked that out as well. And what we saw is that through this 2019 period, which is very much what I think we're currently in, something like this 2019 period, this sell-off that we had in May, June, July felt like this. The world was over, Bitcoin was never going to come back, and it was just all horrible. But the hodlers kind of go, this is the opportunity. Then we had a wake-up rally, which we had through August through to November. We had a wake-up rally from, this was April through to July. Then we had a 9-month bear market. But what did we see in that 9-month bear market? Well, over here we saw distribution, absolutely. During the 2018 bear, people were freaking out, they were selling. During 2019, people were not selling, people were accumulating. This rally woke everybody up and said, you don't have enough Bitcoin. So even though it was red for 9 months, people stacked really, really hard. Now, Bitcoin on a macro stage, the all-time high in exchange balances happened precisely on the March 2020 sell-off, right? And we all know what happened after that. The world changed in every possible way, and we've since basically seen a new macro asset. So as far as I'm concerned, this lifelong uptrend reverted on this day and has been essentially trending down ever since. Now, there's lots of layers to this, GBTC and institutions, and some people say that coins will never fully come off exchanges. Yeah, this is all true. But this is a very, very obvious inflection point in a lifelong chart. So it tells you something about Bitcoin maturing.
I was going to say,
and very much in this current market cycle, this feels like...
Yeah, right? So I was just going to say, sorry to interrupt, if you can go in a little bit more for the guys,
No.
There's been a clear change, right? So back from January 27th onwards, up until basically around when COVID hit, there's something significant has changed there. What are your thoughts on what has happened there?
Yeah, and this is really where the macro side steps into it, and why I think that Bitcoin is more or less reacting to it. It's a global asset. It's relevant in every single country. There's liquidity in every single fiat currency. I would argue that there's probably no other asset in the world that more people have access to than Bitcoin. So as a result, and it's 24 hours. So as a result, it responds to everything that's happening. And it's in many ways the perfect asset to price in all information because it's highly liquid, highly accessible, global markets, 24/7, and finitely scarce. So really what we saw is a change, it's probably not even a change in. We saw some extreme monetary policy, right? Whether it's fiscal policy, interest rates back to zero. But I actually don't even think it's that. I think that was always going to happen, right? We saw rumblings back in September 2019. Lynn Alden talks a lot about this, where the repo market started blowing up. And it was basically saying that there is stress in the economy, right? As we kind of push forward with this fiat system, it is in the last innings of its life. It is getting to the end of its useful life, and the sheer amount of debt is just simply too large. And that's the debt we have at the moment, right? US just crossed $30 trillion of total debt, and they've got hundreds of trillions of dollars coming down the pipeline of entitlements, pension funds, all this kind of thing. So, I mean, where do you get that money? The only way they're going to get it is by essentially debasing the currency. Mm-hmm. So it's not even that monetary policy changed following March 2020. What changed is that the market finally perceived it. So we've had since 2008 quantitative easing and loose monetary policy, and they've struggled to get off zero in terms of interest rates. 2018, they tried pulling up interest rates, but they essentially started to crash the market in December. So there was already lots of warning signs and cracks. Yields curve started inverting back in 2019. There was a whole bunch of things saying that something's wrong. So this event, I think, would have happened irrespective, with or without COVID. What I think was happening is that the fiat system is coming into its final legs, and people recognize that. And in the same way that the central banks need extreme monetary policy to deal with the problem that they have at hand, the market then says, well, maybe something that's looks extreme on the surface, like digital scarcity, maybe it looks extreme, but actually is the exact right solution for something that is, otherwise extreme. So this is a change in psychology. People started recognizing that you basically want to be putting Bitcoin under your pillow and hanging on to it for dear life. So I think that's essentially the psychological shift that has happened.
Cool. Awesome. Sorry for interrupting. That was helpful. Thank you.
No, it's fine. So, this is kind of the chart that I refer to when I say that Bitcoin is now a macro asset. And you can see it, right? This is a lifetime trend that has just changed. We can see it across a number of things, whether it's transaction volumes or everything else. Institutions stepped in, particularly around October. Maybe I can jump to this metric here. So this is our relative transfer size. So what we're looking at here is a breakdown of how many dollars are moving around the system on a typical transaction. Let me just whack a 30-day on this. Now, the dark green colors are $10 million in the dark green, and then the lighter green is $1 million to $10 million plus. So what you can see is, as a proportion of total traffic, this is something like 70% of the total volume. And you can see that it really started to skyrocket from something like 40% up to 70%. It's like 75% now. It's actually elevated during this correction, which is noteworthy. But it started in around October 2020. And this is the phase where Michael Saylor's starting to get in. There's a bunch of pension funds starting to get in. It was kind of that the first burst of institutions are coming for real. And we've essentially seen them take over dominance in the amount of transaction activity, and they've stuck around, right? Obviously, it's ebbed and flowed, but retail level transactions simply have not regained their dominance. So we can see that institutions are indeed in the market. When we look at people who are, even just coming into Glassnode, we're seeing big banks. They're coming in and they're starting to, they want to understand more about this asset. They want to understand more about the digital asset space. It is something that they can't ignore anymore, and we can see it across many of these metrics. And this is just a really good one to show. Obviously we have large money moving around at the top, but note how quickly it died back off, right? This is institutions losing their interest. Whereas here, we've had two 50% drawdowns, and institutional transaction flows are actually up in terms of total dominance. So that speaks to two things. There's obviously fewer retail running around, which is true, but simultaneously, if you had told me 2 years ago that we were going to crash to $38,000 and that would have been scary, you'd be laughing out the door. So it's a very, very different world now. And I think as far as institutional adoption plus the macro narrative, they really do speak to a changing of the guard, so to speak, from a retail dominated market to an institutional dominated one.
Yeah, that's really good. And what do you? So a lot of questions that we get recently is around, especially new people coming into the space, is they still don't understand the volatility and why Bitcoin has these huge drawbacks or drawdowns. And I mean, it's happened a number of times over the last few years. The 50% drawdowns. I don't think you can just assign one reason to that, but are there some key factors that you put that down to as to why we have these huge volatility?
Yeah, so I actually have probably a different view to most people. My view is that this is what markets are supposed to do, and I think what people forget is that the stability, in inverted commas, that we see in traditional markets is actually manipulated. So in order to achieve that stability, you need, at the current clip, $120 billion worth of bond purchases per month. And the second that they say, maybe we have to remove that, we have to start tapering, then suddenly you've got volatility that emerges later on down the line. So what I actually think people have forgotten is that markets are so heavily manipulated by passive investing, ETFs, central bank liquidity, easy money since 2008. And what happens is we're starting to get volatility. It's like potential energy. So the more that they compress that volatility, the more likely it is to eventually emerge. And when it does, right, if we look at what's been going over the last couple of days, we're seeing tech stocks, billion-dollar, $100 billion, trillion-dollar tech stocks wiping out 20% of their value in days. And the worst part about that, as far as I'm concerned, is that all of those are happening after hours. So retail is there trading during the day, and the markets close, institutions take over. Next thing you know, $1 trillion wiped out of the market, tech stocks are down 25%. And retail just has to wake up and wear the brunt of that. So on the other side of that, Bitcoin is more or less a free market. Everybody has access to it, well, more or less, certainly on a relative scale. It's pricing and information in all parts of the world, at all times, in every time zone, all the time. I believe that this volatility is actually what a normal market looks like. You've also got layers of, it's new technology. People are still coming around to it and still don't believe it. And it's a Ponzi scheme to some and a scam to others. So there's all of that adoption process. But essentially, I think this is what markets would look like if you remove central bank liquidity. I think it would be pretty chaotic. And I think if they did actually just say, that's it, no more cheap money, we're going to let free markets price the interest rates, I would be expecting something like an 80% drawdown in every single traditional asset, maybe except gold. And I think that the volatility would shock everybody because it's been suppressed for so many years.
That's a really good point. I think, as you mentioned, like Bitcoin is probably one of the first like real raw assets where you just see live human psychology on a on mass scale. Where you look at, I've even saw some stats on some of the tech companies that have increased their revenue 4 or 5x over the last, say 6 or 12 months, but their valuation is actually lower than what it was. They're actually like, their revenue multiples are, decreasing so rapidly that it's not outpacing the actual growth of the company. Like it just seems so crazy from an investment or just just for outsider's perspective.
The challenge is what is fair value?
Yeah.
Where do you find level footing? What is something worth when PE ratios have been blown out of the water, and none of the historical references make sense anymore? And it's a problem across many things. How do you find what is level? Where is the water level? Where does gravity kind of put things in perspective? And the market's trying to deal with this right now. The regime is changing. We have inflation that is real and likely persistent. We also have inflation that is partly driven by monetary policy, but a lot of it is driven by just deglobalization and aging populations and all sorts of dynamics that are going to change the whole game. And there's no trader alive that's really been through a serious inflationary regime. So most of the tools that have worked for the last X amount of years, X decades, simply don't work anymore, and that is going to put the whole market to a serious challenge.
I just wanted to finish off with one topic around obviously the boom of the NFT market, and speaking of fair valuation, there's just another market that seems to be going bananas that no one seems to be able to really value correctly. We were discussing before we jumped on, the comparisons to the ICO boom and how, whether you go to the pub or my brother or whoever seems to be, getting in the NFT space or creating an NFT. What impacts do you have, or do you think that the NFT market, in terms of the money going into that, ecosystem, has on the wider like Bitcoin and other crypto markets? Yeah,
it's a good question. So, there's a few layers to it. So, I think and this is the thing, right? I am a Bitcoin, I wouldn't say maximalist, but I'm close. It takes a lot to convince me that something needs a token, or in this instance, needs a token with a JPEG attached to it. That said, I like to experiment with things. If you follow me on Twitter, you'll see that my profile is an NFT. I get it, and I like to experiment and just try these things. So I can certainly see why they have popularity. I'm also pretty skeptical that I think that there's many similarities to the ICO market, both in the distribution mechanism. We're getting to the point where it's penguins, and then it's foxes, and then it's dogs, and it's like how many more animals you get. Eventually, you're going to run out of liquidity before you run out of animals. So I feel like the bear market is probably coming, and I think it's sooner than people expect. Particularly when you start seeing it. What are we seeing at the moment? We're seeing Bored Apes go to 100 plus ETH floors, and who is buying them? Well, celebrities of the highest order. Now, what's going to happen? How many celebrities are going to follow the other celebrities? Probably only a couple. And how many people that are willing to spend 110 on a Bored Ape? Probably not many people. So I think that to me looks like this. That to me looks like the 20,000 all-time high for Bitcoin, right, on a relative scale. So I think the liquidity in that space is going to dry up because we're basically seeing that final flush. So realistically, who is selling those Bored Apes? Well, the people who are selling those Bored Apes are the very same people who are buying Bitcoin down here in 2015, right? So they're essentially the people who were willing to weather all of the volatility. They hung on to their NFTs, and they're now the smart money, the long-term holders of the Bored Apes, are now liquidating to the biggest hype cycle of all, which is mainstream media and celebrities. So go ahead and buy them. In terms of from the celebrity perspective, you're basically paying those long-term holders for the risk they took, being at the right place at the right time. However, that to me feels like the ultimate exit liquidity event. So what kind of happens next? They're probably going to go through the ICO phase, which is for any of you who kind of rode up through this 2017 and 2018, I would challenge you to find more than 5 ICO tokens that still exist and have any kind of long-term value proposition. So I think there's going to be a pretty substantial flush out. The challenge with NFTs is that you need to find a buyer, and it's like a house. It's not the same as just market selling into whatever liquidity. You need to follow the floor all the way down. And when the floor is going lower, people are probably not going to be stepping in and buying. And I think that the liquidity profile for them will probably drop substantially. So they're certainly going to go through that process, and they have to. Because with all technology, you have the boom, you need to have the correction to the downside to flush out all the junk, reassess, get everybody's quality control back in order. It's a healthy process. It needs to happen. And what will probably emerge from that is a whole new suite of ideas and concepts, right? When we went through this bear market, we saw DeFi start to pop up in 2020, right? Which has obviously gone through its hype cycle. It's going through its bear market right now. It just seems to continue to drip lower. But at the same time, the ideas are there, right? The concepts are there. There'll be a reemergence of it, but it probably needs to go through the larger scale correction. And when I think about the current market structure, it has a lot of similarities to 2019. And it feels like we're in this phase where we're essentially going to see the altcoin space, the NFT space, probably have a harder time relative to Bitcoin. Maybe Bitcoin has a harder time relative to the dollar, but I think the big difference at the moment is the dollar is going to have a hard time against everything because of just the sheer macro problems that it faces. So it feels like a hard asset regime is probably advantageous. I think Bitcoin and even gold, both of their charts, I mean, we saw Spotify and Facebook losing 20%, which is pretty scary stuff in the tech space, and Bitcoin is basically hovering in the same range. That's telling me something about the demand side. Right now, when we're seeing 20% moves in the biggest companies in the world, and Bitcoin is just hanging on there at 36,000. To me, it feels like the damage is done. Gold is trading at its infinite value of $1,800, which will probably be there for the next 10 years, but it's also holding up. So that's kind of my general view. I think that far out on the risk curve is probably going through its final blow off top and is probably going to start flushing out from here, and there's going to be a consolidation back to quality. Just it feels like 2019 on that front from my perspective.
Awesome. Yeah, appreciate your thoughts. And I think from my perspective, just stacking sats 50% cheaper than we were before Christmas. So it's a pretty simple game.
That's it.
Cool. Well, I think we'll wrap it up there. That's been really good. Thank you very much, Checkmate, for jumping on as our first monthly episode. So if you want to hear more of his thoughts, Checkmate provides analysis and opinion in our membership group 3 times a week. He does some more in-depth videos and great quality content, and our members love that. So you can sign up for a 14-day free trial and check that out. Checkmate, where is the other best places to find you? Probably Twitter. I know you're pretty active there as well.
Yeah, so you'll find me on Twitter at @_Checkmatey. Don't ask me how I came up with the name. It just kind of happened one day. And in terms of most of the content that I'm producing, Glassnode's putting out a whole lot of stuff. Whether it's video or written content. So, our YouTube channel is kind of where I'm putting a lot of our effort to really spin that up and try and do a bit of a mix of market analysis, on-chain 101s, a bit of guidance on how to use the actual tool set. So it's a broad experiment where we're trying lots of different things, but it's certainly fun, and the comments are great, right? People want to learn this type of stuff, and it's kind of a joy to actually put that content out there and help people understand. So it's good fun.
Awesome, and I know you're very busy, so I appreciate your time, and we'll catch you in March. Thanks, mate.
Good stuff.
Cheers.
Thanks, mate.
Bye.
Cheers.